Hey, hello and welcome to the new episode of FellowCommerce, where we delve into trends and strategies shaping the modern commerce in a very condensed format of 20 to 30 minutes because you don't have a lot of time. We value that in you. Thank you very much for joining. And today we have a fantastic guest for you, Vinny O'Brien, and he seems to be one of the top voices in retail. And I'm planning to ask him all of the questions about the trends shaping our industry in 2025. Hi, Vinny.
Hey, Philip. Thank you so much for having me on. I'm based in Ireland down the southwest coast. I work with a consulting firm in New York as well, or Commerce. And I work on both sides of the pond. So I think in terms of perspective, I'm able to provide a little bit of perspective on Europe, can provide a lot of perspective on North America. And for the last 10 years or so, I have worked as a brand owner as well with an outdoors brand in the direct-to-consumer space. That's the sort of thing that keeps me honest. In some of our pre-discussion, I know we were talking about, the perspective of consultants can always be very generalist. I was very nervous of being a generalist when I first started, but it's led me to a point now that I'm quite comfortable because I can get deep on certain topics and certain categories. And it allows me then to open the door on other areas as well. So hopefully I'll bring a perspective that is interesting.
Thank you very much for joining. And also, I know that you recently shared some of the trends during the NRF big events in New York, which is also something that I hope we can talk about today. And I want to start with a very broad question. This will be, what are the key trends affecting our e-commerce and retail industry in 2025? And I guess that this was exactly the topic that you talked about in NRF.
Yeah, and 20 minutes is tough for a talker like me. So if you need to hit the stop button, you just tell me. We can move on through questions as well. We hosted an event at NRF last Sunday. For people who are not familiar, NRF is the big retail show. It's held every year in New York. It's part of the annual conference circuit. It's the real kickoff. So about 40,000 people attend it. So last Sunday, we put together a presentation called The 5 Forces Affecting Commerce in 2025. And the 5 headlines, I guess, when we were breaking it all down into things that we felt are going to be interesting this year. Some of them might seem cliche, but we can talk through that. The first one was the cheap consumer and the big trade down. And we learned something really unique during that process. And I'll come back to that in just a sec. We then had marketing is king and merchandising is queen. So how we create the relationship between these two carefully threaded skills that we require. And I'm sure you're familiar with them both, but one without the other can't really can't live independent of each other. They've got to find a way to coexist. We have a look at the generative brand because we have to. I guess it would be irresponsible of us not to try and discuss this in some meaningful way. We also had a look at the world of private equity, and we had a look at equity and exits because there hasn't been many IPOs in the last number of years, and we were trying to figure out why that was. And I think through all of those forces, the final one, was the Emperor's New Playbook. So how does a modern brand owner compete and live and thrive with all of these competing forces going on, trying to get your time, attention, energy, and how do you market effectively and trade effectively? And going back to that very first point, because that cheap consumer is something we've all been challenged with in the last 2 years in particular, maybe not after yesterday, but the idea was that we've led consumers to this point where deep discounting is all that they want and cheap products. So when we had a look at it, and I'll be interested to hear your point of view on this, but we went back over 20 years of economic data and we had a look at the spend to debt ratio. And the spend to debt ratio is actually lower now than it was at around 2008 when the financial crash happened. So what that's led us to now understand is that the consumer has more spending power today than they did in 2008, despite all of the challenges that we have had. And I think what we're kind of anticipating and economic changes, legislative changes in the US, all of those political changes now lead us to believe that the consumer is going to live up to that name that NRF gave them, which is the resilient consumer in 2025. And we're actually expecting to see a little bit of an uptick in terms of consumer confidence, price decreases, and a little bit more of a loose playing ground for brands that want to get back to delivering growth strategies and not always looking at the efficiency side of commerce. I'm not sure if you see the same kind of data coming through your own customer profile, but we thought that was a hugely interesting starting point for us as the discussion went on.
Yeah, absolutely. And I think that there is a lot of headwinds that happened in recent years, and the brands who will really use who use this time to actually build the efficiency, they can actually accelerate in the coming years. But it's interesting because there are very different channels, very different forces that affecting the market. On one hand, brands are building their direct to consumers channels, and they're improving the messaging, brand building, consumer retention, building communities. There is a lot of conversation happening about the social commerce, about the live commerce in the US, and how that might be something that to look at in 2025 finally. And this is all direct to consumer, but at the same moment, there are many, many platforms that are actually a large marketplaces like Amazon, like Walmart, like Zalando here in Europe for fashion, for example, et cetera, et cetera. And it's hard to compete with them, and to build a strategy that will be a true omni-channel strategy where you have the same pricing, the same promotions, the same stock, the same, or you will have a certain segmentation across all of these channels. This is challenging, but played right, that is definitely a prerequisite for the brands to grow in 2025.
And we talked about this on our show on Friday, where we're encouraging people to make a bet. So you have information. Now is the year to no longer sit on your hands. If you're at the poker table, you've got to put down some money and decide where you want to go. To your point about marketplaces, I'm ex eBay, so I've been a fan of marketplaces for 20 years. I've traded on them all that time, personally and professionally. And I know their value. And a couple of stats that struck me as I ended the year were, one, in Europe, 80% of all traffic, and it varies by about 2 or 3%, but 80% of all traffic approximately is marketplace driven in Europe, which is a pretty staggering statistic. And then we did some work with BigCommerce and Feednomics last year, and the report that we put together had a look at the fact that if you were in I think it was 3 or more channels as a starting point, you had a 4.5x higher growth rate than than brands or retailers who were not in those channels. So we were kind of saying, well, look, your customer is hiding in plain sight. You just got to go find them. There are signposts there. I think now is the time to make a bet. And that's what we're saying around that cheap consumer. We feel that we may be at this turning point that can give us a little bit of confidence, but it's using the data and then actually deciding to do something with it. And I think that's where that second force really kicks in for us, because as you said, there's so many ways that you can approach marketing now and so many channels that you can get into. It can be overwhelming. So you've got to do a few things. Obviously you've got to make sure you got the right people in place. You've got to make sure you're in those right places. But today there's probably no hard and fast rules for what that right place is. So you've got to put the customer at the center of it all and start working backwards and saying, well, actually, how do we appear in those places? Historically, merchandising, and from your background, it's such an important skill, and it's probably something that's been underserved from an e-com perspective in terms of bringing people through into that space. And we've been more down the marketing route in terms of digital advertising and maybe community building, as you said. There's now got to be more cohesion between those two skills, that merchandising is almost driving marketing, because you've got to make inventory really efficient as well, and making sure you're getting sell-through out, that you can reorder properly. Procurement strategies are now even aligned to campaign planning, which I think is all very healthy for the future of where we're getting to, because I've watched a narrative for the last 2 years where profitability has been this kind of holy grail that everybody has been trying to get to. But for most people, it's not achievable, at least not in a 2-year time period. You need to build up that proficiency over time. So in my mind anyway, I feel that we've been too far down the road of saying profitability over everything, and that's led to this push for efficiency. It's probably helped brands inadvertently, but now we need to make sure that we have a growth strategy aligned to or sitting above that efficiency strategy, because otherwise we're not going to achieve anything. And we know that there is still growth opportunities in e-commerce. We're still at this very early stage. So for us, again, it was one of those signals that said to continue to invest in your e-commerce strategy, but do it in a way that is planned. And maybe with that profitability push, we now have better frameworks for developing better future commerce is probably how I look at it.
Yeah, 100%. It's hard to invest without being profitable or having a good margin. So focus on profitability is an important one for any business, of course. And if we can move, because we have an exciting one there, I think.
The third one was taking a cue from you, actually, was the generative brand. So how AI is impacting, and it's impacting in ways maybe that we're not really seeing. And that's one of the quick evolutions that I've seen in the last 6 months, is that it's becoming embedded in the tools that we're using without us really realizing it. So traffic qualification, for example, that is improving. The advertising platforms are now becoming so automated that, the world of agencies is going to look very, very different in 18 months. I think the brands that are going to get very smart about it are going to be able to utilize these tools in a way that they're going to be able to run their business in a very micro but very macro fashion as well, because you'll be able to set your business rules and say, behave to these rules. If not, let me know. Send me a text. I'm going to be at a bar for the rest of the evening, but tell me if my results are not happening the way I want. But qualifying all those areas that you've said, or setting down kind of insights related investigations, I think are things that we can do now with greater ease because of the evolution of these tools. So I think our responsibility to ourselves is to figure out what are those questions we've asked ourselves before but never been able to answer. And there was a demo, and I'll talk about it in more detail a little bit of time, and I'll try to keep this relatively quick. Was one of the platforms was demoing their AI assistant, and for a small brand owner, this is now possible, I think, to have a one person business that is doing somewhere between 1 and 5 million euro in turnover, that is run through an AI assistant, because you can do your reporting, you can set up your marketing campaigns, you can run the advertising that is associated with it. You can set your AI assistant to go and follow influencers to see what trends are coming in, so your procurement can become better. So I think from that perspective, I'm saying it's possible. I'm not saying it's likely, but AI is making it possible that we can build we can make smaller businesses more efficient with growth built into it already using these AI bots. So again, that was a big focus of everything at NRF. There's nothing that doesn't have AI anymore. So we've got to get used to it and make sure that we have the best knowledge available to us all the time. And the most interesting the most interesting point that was made to me was you've got to work with trial and error. Like there's nothing wrong with getting something wrong. It's what you do when you learn from it, really. And I thought that was really interesting from Rainbow Shops. They have about 1,100 stores across North America.
Yeah, that's very interesting. But I actually agree with your point that startups and brands who are just starting to build their architecture these days have a much better chance of utilizing AI to automate the whole business process end to end. Where, on the other hand, legacy businesses, older businesses, the challenge is usually not to find this AI solution and feed the information to it and ask the assistant or an algorithm to do something for you. The challenge is actually where the data sits, why it's not connected, why it's not integrated, how to get it all in one place.
And the fourth trend was the world of equity and exits, and it was very US specific, that there hasn't been a huge amount of investment opportunity because the exits haven't been strong. So we look at the performance of D2C historically. There have been some unicorns. Dollar Shave Club was probably the one that we all set up and took notice of. And since then, it's kind of been a backward trajectory. And then we also had, in the middle of all of that, we had aggregators. So we had Amazon aggregators, who were private equity firms or VC firms, who were bringing all these brands together in under one umbrella and hoping that they got economies of scale from these maybe similar type organizations, and they could benefit from centralized marketing or centralized fulfillment. But the thing about it was that they all wanted that goal of exit really, really quickly. And you know yourself, it takes a long time to build up community, build up brand equity, and to build up repeat customer rates, so that the metrics that they were observing in order to get to their goal were not possible in the time frame that they were looking at. So there's been this big reset. I think the interesting part of it is there is money now to reinvest. Where it's going to go, I think, will be companies who do everything that we've talked about. They smartly use AI. They've got smaller teams. They think differently about routes to market. They utilize marketplaces, and they demonstrate an ability to think forward and have a growth strategy because the efficiency's already been delivered in the technology that they have there, and the process comes from that. So I think it's going to be interesting where that goes, because as I said, there was about a 93% drop in investment rate in e-com businesses between 2021 and 2023. There is money out there now, there's appetite. And I think for the right kind of organization, we're going to see continued investment going into 2025, 26. And it gives us pause to say that when we see that first success story, what are the success factors? And I think we've really got to look deeply at them to see, is there a blueprint that others can follow? And I think that's going to be an interesting outcome when it does happen.
Yeah, interesting. I agree. Yeah, I think that with all of the DTC brands, and especially with companies who thought that they can acquire all of the marketplaces, startups and marketplaces vendors, removed the founders from the equation and handed it over to managers who needed to run several brands at the same moment. Of course, this model had its moments, and it was not all smooth and clear, because like in many cases it was a complete startup. So a lot of it was rooted in the founders who felt the product, who felt the audience, who did a lot of those things because they were super committed to it. And then that was part of the reason for the success in the beginning. Interesting. There was an interesting idea, an interesting trend, but I think that we will see less and less of this. So you need to really prove your DTC startup now before getting any kind of funding. Nobody's throwing money at those DTC brands anymore.
I don't think so. And then it all comes down to probably that fifth trend that I talked about, which is the Emperor's New Playbook, that we've got to now decide how we're going to behave as modern brands, because I'm sure you're all too aware that it's becoming increasingly difficult. Time to make decisions is shorter and shorter all of the time, yet the outputs are expected to be improving as well. And I think there's some of the challenges that we now have to embrace. There's new channels emerging all the time. And the skills that we need to run these are probably the area that I see the biggest challenge, because a lot of what we do now when it comes to new channels or new ways of market delivery, say, or go-to-market strategy, is going to be test and learn. So it's going to require us to be brave. I said earlier, we need to start making bets, but that modern brand playbook, it probably doesn't allow itself to sit there for 12 months and you do your annual plan and you start in January and you get to April, you realize that, oh my God, we're not on plan. What are we going to do different? I think that ability to work much more nimbly has got to sit underneath your strategy, and that's cultural. I think it's to do with the people that you have. And I remember a discussion I had at NRF in 2024, so 12 months ago. And one of the most interesting observations of a colleague of mine was, we can no longer think in terms of months. We've got to be working from week to week. And I almost feel that even week to week now feels like a long period in time. So when they say that a year in e-commerce is like dog years, so it's like 7 years, I really feel that that's what a week is like now. So we've got to get down and understand that trading and the activity of trading, which is why I love marketplaces, is probably the single biggest thing that we need to understand when it comes to utilizing that modern brand playbook. And brand building takes a lot longer than we think. It's, and that ultimately will be determined by your strategy. So if you're a D2C brand and you're building to exit in 3 years, you're going to overcook on certain areas. But if you've got a 10-year plan, or you're a brand that says we want to be here for the next 100 years, I think you've got a much better chance of getting those daily things right, because you're building to a much longer term goal. So I think that modern brand playbook will come down to what are the strategic objectives of the business and how you're allowed to execute against them, given the flexibility that you need yourself, and you need to have the appetite to want to do all that as well.
Yes. So I wanted to continue with asking you the usual question that we ask here about underrated and overrated technologies. So let's start with the underrated trends or technologies. So what, in your opinion, would be the underrated for 2025?
Underrated are probably customer service for me, because we do have very, what I would call, lazy uses of technology when it comes to customer service. One of the big trends that I've seen, and a couple of partners that we have in that space, they go beyond service and get into sales. And it's something that I would have always seen when I worked in retail myself was the idea that you can turn service opportunities into sales. And only yesterday I was working on a piece of research around this, and what it has done for certain industries, and it's not applicable to everybody, but it has opened up new revenue channels by being able to deal with the query during maybe a live chat or a kind of a customer questionnaire on the way through a part of a site. And it's something I don't think we should be afraid of, is asking a question of a customer along the way so we can better serve their need. But what they've been able to do is turn that into making bookings for service channels that they have. And I've seen that in the automotive industry, where you might want to get, not just buy a part, but get it fitted. You need to find a dealer who can do it, or a garage, or someone that can provide that service for you. It's the same in DIY, that you might want a service provider. So it's unlocking these new channels. And the reason I think some of that's underrated in general is because Shopify have kind of screwed technology pricing for everybody. It's a very general statement, but when you can buy a business out of a box for $50 a month, we no longer have a sense of what value is when it comes to technology. So when you look at a customer service tool and think, my God, that's $10 a month, that feels like it's good, versus something that is $60 a month. I think it's worth evaluating what it can actually unlock for your business. And the best outcome I've seen out of that as well is that you're able to upskill your customer service team and let them be empowered to learn new ways to grow in your business, which is not something that's always been available before. So I think customer service technologies are exceptionally undervalued at this point in time.
I'm very happy to hear that, because I'm 100% with you on this one. Customer service, order management are things that were, I think, abandoned during the race for a better conversion. We were so focused on converting, getting traffic, getting new clients, and sometimes some companies retaining through loyalty programs, CRMs, but again, trying to automate everything. Like, many companies completely forgot about how important that is. And after placing an order, your customer still thinks, many customers don't even realize that the parcel is being delivered by FedEx or UPS or DHL or whatnot.
2025.
They think that I've ordered from this company. I've ordered like my vitamins or something from this company. So this company is now delivering it, and it's so much can contribute or take away from the brand loyalty, the quality of service and the quality of order management that we have. So I think that 100% on this with you. It's one of those areas that we will see some potential growth in for the services to provide there. And okay, talking about the overrated technologies or trend.
I have a very quick answer here. Personalization.
Yeah. Okay. Interesting.
Yeah, I very controversial. Well, maybe not controversial, but I don't think as consumers we necessarily want as much personalization as we think. I believe in relevancy. And there's also this fight that goes on in my head between, we say we want privacy and we want personalization at the same time, but we're not going to give over our data that's already held over here, and now we don't want to re-release it. So I think we've got this unusual fight in our head as to what we believe personalization is. And my own theory is that we don't really know what we want until it's put in front of us, and then we either like it or we don't. And you look through all the technologies that are probably pitched to you on a daily basis almost to say, this can do wonderful things. And in most cases, the technology is fabulous and it can do amazing things. Like Amazon has just retired try before you buy, because even though it's great for the environment if we try something on before we decide to take it home. It's lasted 18 months. There's been other versions of this across technology companies. I think we're lazy as consumers. I don't think the level of personalization maybe that we assume in tech that we want is something that we're actually able to utilize, because our attention span is so short right now. You think about the areas of technology that win all the headlines: payments, logistics, notifications. It's a lot of very simple things that I call utilities that are in our pockets. If it's something we can interact with on our phone within seconds of taking it out of our pocket, I think it's good. But personalization, the level of investment that has gone in there, the level of marketing technology companies that are pitching in that space, I believe has been a bit of a false economy for the last 2 or 3 years. AI is assuming that role. I think it's taking the need for some of that personalization away. So I think we'll see a drop off in the number of those companies in existence, and AI is just going to erode through that market. And I do think we will get more relevant experiences by extension. Amazon have tried to do it for years, and I think that they're bringing more of that to bear. So personalization is my overrated technology for 2025.
Okay, interesting take, because I think that there are a lot of people who are keen on personalization, but I can agree to that personalization in many cases is confused to automation. And in many cases that I've seen, personalization is being called something like very simple segmentation of recency frequency monitoring, and that is being called personalization in the end through automating, like communications and you said delivery types of things like this. And many of this personalization initiatives were actually implemented to do something that we discussed in the beginning, to become more profitable, to become more effective. So it was not the personalization for the sake of better consumer experience. It was the personalization of actually, okay, let's upsell, let's cross-sell, let's give cheaper or more expensive delivery options and things like this. So this is beneficial sometimes for the business, not for the consumer. And there is a balance to that. Of course, we need to think about the business as well, but there is a balance, and that kind of personalization will just be automated most likely inside of the services. I'm really curious to ask you about your favorite tool that you have recently discovered for yourself, that you use in your daily life or your business, that helps you and you love it.
Yeah, I've been thinking about this a lot because I use a few. I try not to use too many because once I switch off in the evening, I try to switch off properly. But I think the one that I would go to is Avoma. It's an AI note taker. It's very useful for me in my line of work, but it can also do things like I can upload videos from colleagues. I can upload videos from conferences. I can get transcripts. I can analyze it. I can give it keywords to look for. I can give it behaviors across my team to look at. And it just makes my life a lot easier and makes the world a little bit better for me as the type of work I do. But I also think in shared experiences where maybe you've got a distributed team, that ability for people to access all the information freely and so on, I think has been really, really useful. The one other one outside of my own line of work that I think has been really good to watch is Luma, which is a kind of a booking application that allows you to do event planning, store planning. It's got a very sophisticated layer of notification. So before I went to NRF, I signed up for a lot of things, but every 3 or 4 minutes for a while, I was getting a WhatsApp to say, you've got to be here, you've got to be there. But within it, it pulled in location information, gave me maps if I wanted to get there, showed me how I could walk there, time to get there, and had a lot of very relevant info for me. So Luma was the technology that I've used. And then from an e-com perspective, the AI assistants that I have seen last week are getting so powerful. I don't see a world where maybe 30 or 40% of us in our industry will not be using them on a daily basis next year, asking them to solve problems with us and solving the problem. I think that's going to be an interesting evolution in 12 months' time.
Exactly. Thank you very much. The links to those tools we will leave in the description to the video or the audio or the post that you're seeing right now. So go check it out. Maybe this will be the tool that will help you become more effective in 2025. Vinny, thank you very much for spending time with us. I hope that, and I'm sure that all of the things that we've discussed today that you have shared were very insightful and helpful for our audience. Guys and girls, I'm asking you to press the like button and to share this video or audio if you like what we were discussing today. Well, let's see what the trends will bring us this year.
Thanks so much, Philip. Have a great morning.
Thank you. Have a good one. Bye-bye.
See you guys.